Hi, I'm Peter Rose, founder of Longwood Currency Trading. What's it like to trade large six-figure Forex positions? I've been asked that a couple of times in the last few months. Most of the folks that are asking that are, regular folks that are trading, a $10,000 account or maybe even less than that, trying to get started and see the potential involved in it, and they're saying, oh gee, all I got to do is add a couple of zeros onto my onto my account and I'll be able to make some real money. I'm out enjoying the early morning here. I'm getting ready to head off to a lunch meeting with a karate student of mine. He's at the master level. He's been with me over 50 years. And we're going to be talking about the process of nature and life and our confidence in living within that nature and life. We're talking about lots of things. And part of that discussion always falls into the financial realm, because at the advanced level, when a student gets to disciple level, it's anywhere from 5 to 8 years, usually 10 years of training with me. We move from the natural progression of learning martial arts, from the physical aspects to the mental, to the philosophical, and then into the practical life orientation. Once you deal with your fears of physical confrontation, our next fears deal with finance and money. And it's only natural that the martial arts education should proceed into that. So I'll be carrying these thoughts forward into my discussion with him this afternoon. And that is a segue into this discussion of, well, what's it like to trade a six-figure account? What's it like to make six figures? What's it like to lose six figures, multi-six figures? That's all part of the progression of your learning. I will tell you that you can't trade a $10,000 account successfully and then jump to a $100,000 account and do that successfully. What I can tell you is that you will most likely fail. There needs to be a progression in the size of the account that you trade so that you can adjust not only your emotional reactions to dealing with large sums of money. Instead of losing 300, you lose 3,000 maybe on a 10 pip hit. It becomes a difficult emotional transition to go through, but there's also a lot of technical things that you can do to have more asymmetric results to your trading. And it isn't because you're over leveraging, it's because you're using multi-lot theory in trading. And you get into game theory, you get into a lot of math, matrix analysis and stuff, if you care to. I don't teach that in my fast track course, but when we get into the advanced solutions course, if somebody's going to be with me for a year or so and they're successful at their trading, they've passed the fast track course and they want to get into this advanced stuff, then I've got that roadmap laid out for them. You can learn that on your own after you finish fast track anyway, because fast track is the base for that. I just take it to the next step. And part of that next step is, well, how would you take a larger size account and manage that? There's no reason to risk it all on the entry. You would be staging that in. Whereas when you're trading the lower size accounts, you don't stage those in. You don't have a $10,000 account and trade 10 minis and break that up into a 3 mini open and a 3 mini build and 3 on the float. That just doesn't make any sense for you to do, because you're not maximizing the gain that you could possibly have for that small of account from a dollar standpoint. When you're trading large size, well, let me say this. There's a lot of folks that have large size accounts, but they only trade a small amount of it. Now, that could be a misnomer, because you could think, well, a $30,000 account trading 3 fulls is a large size account. So if I only trade 10,000 of it, then I'm safe. That's not what they're saying. They're saying that they have the ability to trade 100 lots. And instead of risking 100 lots, they're going to break that down and maybe trade 3 lots of that. But they're going to trade that 3 lots really, really aggressively. And they may make, because of that aggressiveness that they can apply to that $30,000, they're hunting for the asymmetric win. But they're also willing to take an asymmetric loss because they can always reload the 30, and because their win-to-loss ratio on a daily basis is so high. I mean, my win-to-loss ratio on a daily basis when I'm trading, small accounts or large accounts, doesn't make a difference, runs about 80% of the days I'm profitable. So with that kind of win-to-loss ratio, you can take a huge hit. You can take an asymmetric hit because you can make that back very quickly. How long does it take to make $30,000 back when you're trading maybe a $500,000 or $800,000 account? Not very fucking long. When you are looking at the larger account size, I think the danger is that you think that you've just added a couple of zeros on and you're going to do the same thing. Your emotions are going to get involved in that. The dollar value is going to get involved in that. And you're going to try to do things that you peripherally understand other people are doing, like staging into the position or trading small and trade a lot, and using high probability transactions to overpower the odds that are against you, simply by just hitting it so many times that you win more just because you're not afraid. Well, you will be afraid. So what's it like trading multi-6-figure account as opposed to a multi-$10,000 account? It's no different as far as your emotions go, when you understand what you're doing so that you don't let your emotions go. Just to give you an example, and I've managed this before, when I was trading the larger size accounts, the 6-figure accounts, I'd get online and I'd say, I made $3,000 today and I did this and I did that. And it's not helpful for you. What do you friggin' care whether I made $3,000? You just want to know how not to go broke, right? So I took a really large multi-6-figure hit and decided that the goals that I had were unnecessary. I mean, I was pushing it because I had goals, and I'm a millionaire. So, the large loss hurt, but it didn't bankrupt me, right? And I knew that I was taking that risk on when I went in, but I was trying to accomplish this goal in a quick period of time. And when you have good risk management, you're not looking to make a ton of money in a short period of time. You're looking to make a steady amount of money over a long period of time, and to be aware of when the asymmetric opportunities present themselves so that you can go all in and pull out maybe a 5x win against your risk. Instead of a 0.5%, you make a 400% return. And that's where you can make big money, but you can't go in with the objective every day of making the big money. My mistake when I started building into this multi-6-figure account was I started out trading 1 to 3 lot position sizes, and then I went to 3 to 5 lot position sizes. In any event, I went from trading 1 to 3 lot position sizes to trading 25 to 30 lot position sizes in about 7 months. And even though I had the technical aspects of doing what I was doing down correctly, I mean, there were 3 months during that period where I made $30,000. So, I mean, that's like $30,000 a month, 3 times. So during that period, I made over 6 figures. But I was trading so fast that my losses were very large as I went up. If you trade a 3-lot position and lose 20 lots, that's $600. Try to do that when you're trading a 15-lot. What's that 20 pip going to cost you, or 40 pip if you let it get away from you? And there were a couple that did get away because I was playing volatility, and when I'm trading very actively, and so sometimes I'll get in there and all of a sudden there'll be a 20 pip spike against me, and I'll just sit there and go, oh, okay, that's 20 pip. I can take that. I'm sitting with maybe a $10,000 loss, but okay, I can hold that. Well, all of a sudden, a $10,000 loss turns into a $30,000 loss. Then you got to cut it, and then you go back in and you drop another 5,000, and you drop another, and so the money that you're dropping at the higher lot sizes chews through the money that you made at the lower lot sizes very quickly, and then you start to redline. And it affects you emotionally. You can't help that. So just because you have a lot of money doesn't necessarily mean that you are safe in trading it unless you know the proper way. I mean, just look at the world around you. You shoot a little 22 pistol, and that's great. And then you think you're going to go and safely shoot an M16 or a machine gun, you're not. You're not going to drive a little Toyota around the neighborhood and then jump into a Lamborghini and push that across the performance track. You kill yourself. That's just life. And I ignored that, going from 1 to 3s to 25 to 30s. And I really have no need to do that. So I'm having a good time trading much smaller lot size position, and just enjoying things so that I can better equate my experience with the students that I have, saying, well, you're trading. Well, when I work with somebody in the fast track program for 6 weeks, it's $1,000 live account. That's it. I don't care whether you're a millionaire, but you trade $1,000 account, because if you can't make $1,000 account work, God forbid you'd want to go in and put $20,000 at risk. So the fast track course is to show you the skills you need in order to achieve certain returns against risk and win-to-loss capability. Gives you those skills against that $1,000 account. And then we jump to a $10,000 account at the end of the course, and I help you set the baseline for that, and then we'll have a final meeting after you've traded that account for a couple of weeks, and it's beyond the course. I still work with you, and make sure that you're not going to let your great success go to your head and think you're friggin' master of the universe and piss away $10,000. It's far better to lose, $800 on the $1,000 account and kick yourself in the ass about what a stupid fool you are, than it would be to lose $8,000 on a $10,000 account, right? You can replace the $800, but you may not be able to replace the $8,000 of the $10,000 account as easily. So there's a learning process that goes with that. There's a learning process as you jump from 10,000 to 30,000. There's a big jump there, and then from the 30,000 level, once you're safe at that level, you can start trading these larger sums, but not compounding. Not at that point yet. I don't advise that. Well, Peter, when would I compound? How am I going to make any fucking money? Well, what I'm trying to do is provide risk management at the forefront of the trading, and not how much freaking money you're going to make. The money is unimportant. It's based on pips. What can you do with the pips? Because the pips are going to control the money, right? So if you can't control the pips, you can't control the money. If you're trying to control the money, you will be unsuccessful. That's all getting to the point of what's it like to trade a multi six-figure account. Well, that's what it's like. You don't trade the dollars, you trade the pips. And if you're not used to doing that, the money, the dollars, will take over and your little brain will get crunched and you'll do stupid shit. Look, if you have any questions about this stuff, I'd love to get an email from you and we could get a conversation going on what trading is like in general. And most of the folks that contact me, they've got a specific problem or something. I'm trying to do this or that or the other thing. And they're satisfied with my answer as to, well, maybe, have you tried this? Well, no, I haven't tried that. Well, why don't you try that? The problem comes in when someone has a process problem. Like I'm trying to do this, but I don't seem to have enough winning trades to overcome my losing trades. Well, that's a process. That isn't a problem. There are several problems involved there. And so you need to maybe look at a more formalized approach to your education than simply asking questions, because usually what happens is someone will ask me a question, so I'll answer the question. Then they'll ask me another question about that, and I'll answer that question. And then they'll answer another question which is related to that, but it isn't as related as it should be. And I'll answer that question. And that brings up another question. And wait a minute. You don't know the right questions to ask. So you have more of a problem than you think that you do. You have a process problem. And so what I need to talk with you about is how the FOREX fast track course that I have, how that's structured. Let me see if you understand how that structure could benefit you. Not because I'm trying to sell it to you, but does that structure make sense to you? And we'll talk about that. And then I'll say, okay, do you think you could do that on your own? Because if you do, I can give you a couple of little hints and you can go and you could try it without taking the course, because it's 6 weeks. And you may be able to do this on your own. If you're able to do that on your own, that's great, because I don't have a lot of time. I'm sitting here enjoying myself. I'm having my morning coffee. I'm not on the phone with anybody in a video conference trying to walk them through their transaction register. I'm retired, so I don't work with a lot of people. So you don't have to worry about me trying to sell you something. But I would like to explain what I'm doing, because I love what I'm doing. And maybe you can benefit from that. But if you need that kind of training, then we can talk about whether you're suitable for it or not, because I don't take everybody on as a student, because it's my time. I don't want to waste my time if I don't think the student is going to be capable of it, no matter how much money you pay me. I've got money. I'm a millionaire from my real estate investment career, and I've got plenty of money to trade with, and I'm happy. I'm not busting my balls over this fucking money shit. So I want to work with serious people that are looking to replace or at least significantly impact the replacement of their job income. I don't want to work, and I don't have time to work with hobby traders or people that aren't going to be able to come up with more than $10,000 or $20,000 to trade their account. I don't teach beginners. I can teach a beginner, but I can only teach a beginner who's looking to replace their job income with the skills that I teach them. Then I can work with you. But you're a lot better off just going to babypips.com and seeing what a golden cross is like and seeing if you can make that work. You won't, but try an engulfing candle pattern. That won't work either. But by trying all those things and losing, if you got enough money to lose enough times, maybe you can figure it out. Maybe I can help you through that process. I don't mind if you're losing. Jesus, we all lose. So if I can help you learn something from your loss, then I'm a success as an educator. And that's great. You don't have to take my course. But if you'd like to learn it without losing all your money, then you have to take a course from me. I'm in conversation with people that I've talked with for 5 years, and they're not taking any course from me. And we're friends. And they tell me what they're doing in their trading. I tell them what I'm doing in my trade. That's a great thing. So if you'd like to get a conversation going, just send me an email. That's the only way I communicate. That's the only way you know you're speaking with me is through my email address. That's found everywhere on my videos and on my website and everywhere. So nobody can fade who I am. So send me that email. Let's get a conversation going. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day, because that's what I intend to do. I'm not trading today. I'm going to lunch.